Good morning, all. A happy 2023 to all of you. May it be a great year in wealth and health. I know I'm here to normally talk about the wealth aspect, but let's not ignore health as well. So let's hope it's a fantastic 2023, much better than what 2022 has been. Okay, let's take stock of the news flow. And by the way, it's good to be back. Recession will hit a third of it. So let's stick with that plate. Recession will hit a third of the world this year, as per the IMF chief. China's December PMI numbers show the lowest reading since February 2020, is the fourth consecutive month of contraction. So we're not hitting the trading desks this morning on the first day of the new year with some positive news flow, I must say. In fact, the outgoing defense minister of Israel says that Israel has improved the readiness to attack Iran. And I think this is something that people should keep in mind on the back of what it could do to crude prices, if at all. So bear that in mind. The good news from India perspective is that the December GST revenue, yet again, above the 1.4 lakh crore mark. This is a 15% growth, going up to 1.49 lakh crores. And now this has been the 10th consecutive month, viewers, of collections remaining above 1.4 lakh crores. I presume this becomes the base and baseline. And I don't know what happens in 2023, frankly, to economic growth. But once economic growth perks up even further, you would expect that the growth numbers on the GST collections would actually be even better. And that augurs very well for India as a nation. So this is probably good news. Now, uh, what about markets by and large? I mean, remember, what we don't have too many queues around the world per se, but be that as it may, whatever we have is not exactly gung ho. So it was a very quiet day um, uh, from a Friday perspective. Frankly, you look at all the other queues as well. There was not too much of a change in the 10 days that have been away, I guess. CBOE VIX is at 23 odd. 10-year yields have perked up certainly from 3.45 when I left to about 3.87. So that's a bit of a bummer there. But the dollar index at 103, in fact, has come off a little bit from what it used to be. So not too many changes. The SGX Nifty indicates a start, which is flattish as well. So no great shakes there either. What's the trade setup therefore for the day and for the week looking like? I would reckon that now that the Nifty's shown a bit of a perk up in the last week, the index may consolidate, but I think broader markets will certainly move independently. It's a good week for broader markets, and you expect that to continue. Metal and energy stocks did show some swag, but IT may remain sideways in the run up to the results. Remember, viewers, this is a seasonally very weak quarter for IT companies, furloughs, so on and so forth. So margins may show a bit of a bump up, but don't expect great revenue growth numbers from an IT perspective. And therefore, until TCS comes up on on Jan 9th, you might probably expect IT companies to probably remain sideways. Now, if TCS sounds off a positive commentary, you never know what that might do. But until then, um, I presume IT companies will remain sideways. Um, Watch out for CV stocks though, on the back of what the print from both Eicher CV as well as Tata Motors CV sales have looked like. So I think I'd watch out for Ashok Leyland in particular in the session today, because the CV sales numbers have looked to be pretty strong from the other two. One would expect that Leyland might do the same as well. So passenger vehicles, the Marutis, the Tata Motors passenger vehicle numbers not looking good. Tata Motors being saved by the CV numbers, and I'll come to that in a moment as well. So watch out for CV companies and Ashok Leyland in particular in the session today. By the way, the month of January as a whole, keep in mind, doesn't show any clear trends, unfortunately. We thought we'll bring it for you to just show you that look at, I mean, if you want to look at a trend, this is not a trend. So if you believe that, I mean, if one wants to just consider whether there could be an up move or down move, very, very difficult. Now, you may argue that a lot of these moves are also dependent on what the preceding month of December does, and you might very, very correct. But I can't get into so many details. So therefore, the limited point out here is that the 10-year averages are skewed because of what's happened in 2012. But that notwithstanding, if you look at 2013 onwards, there is hardly a clear trend that we've seen, except for the last 4 years, wherein January has been a negative. Mind you, this December that has gone by has not been a great positive, and therefore, suffice to say, it's very difficult to predict what January would do this time around. I would suspect that it could be an uncertain month of sorts, and that's where I would want to leave it. Now, what for the day today? What are the stocks to monitor? I think that becomes important as well. And I'll start off with the auto sales numbers that have come out thus far. So Maruti Suzuki, a bit of a disappointment. The verdict is, of course, below estimates. Total dispatches fell 9%. Mini and compact fell 21%. It's just utility vehicles which actually saved the day for Maruti, up about 22%. And exports fell about 2.2% to 21796. Now, keep in mind, it's a lot of expectation from Maruti because of what Grand Vitara could do and the upcoming launches that the company said it will do. And maybe they help. But for now, because of the fall that we're seeing in Mini in the compact, which is actually the mainstay for Maruti, you're not seeing a great number. I would suspect that this could probably hurt the stock today. Eicher Motors, the CV sales were above estimates, and the motorcycle dispatches were also good. So first, uh, the CV sales. Okay, is this the CV sale? Yes, the December CV sales. Total sales rose about 17.3% to 7221. Domestic sales rose about 28.5%, but exports fell 59%. By the way, it's a very low base, but keep in mind export numbers across companies are not looking good. Remember the South Korean export numbers as well that got released last week were not that great. So the export data across products, across companies, across countries is not looking all that great. You have to bear that in mind. The global economy is slowing. Eicher Motors motorcycle dispatches as well. Royal Enfield sales fell 7%, but it was a better than expected reading. Sales of models with engine capacity exceeding 350cc fell majorly. So the smaller cc did okay, the larger cc did not. Exports flat 8579. What was in line with estimates was Tata Motors and Escorts Kubota. Both of these were exactly in line with estimates. The thing is, in Tata Motors' case, actually, VST actually was better than estimated. So let's leave VST out. But Tata Motors, firstly, the CV segment reported above estimate results, but the passenger vehicles was not great, and that's why the overall numbers were in line with estimates. Escorts Kubota December numbers were in line with estimates. VST Tillers, it's an error from our end. VST Tillers, actually, the numbers improved. The sales were very strong on a month-on-month basis. Total sales at 4559 versus 3640 units, which is 25% above, and month-on-month 76% growth. So actually, VST Tillers was a very strong set of numbers, and from a tiller sales perspective, the numbers were much better than the last few months prints, and which is actually a pretty good sign. It's a very illiquid stock, though. Keep that in mind, but might be a good one. Keep in mind, at the end of the quarter two, the company had guided to a very strong annual growth number for the next 3 or 4 years. So it's a company that is guided strong, and now it's starting to show, or at least first month of it showing good numbers. Let's see if these numbers continue. So VST Tillers is a stock in focus. Non-auto, MCX comes in focus. Morgan Stanley note suggests that the company has extended the software services contract with 63 Moons by 6 months. Now, Morgan Stanley had assumed that the new technology contract with TCS will get implemented from quarter one. Now that MCX has extended the contract by 6 months, you know that it is not going to be implemented by quarter one, maybe by quarter two. And therefore, because given that the new tech contract is only post quarter one, which is maybe in quarter two, there could be some increase in Morgan Stanley's and the market's cost estimates. And Morgan Stanley believes this is negative for the sentiment on the stock, especially after a very strong recent run. So if MCX corrects today, you know why it is correcting. HG Infra Engineering won a contract for part design and construction of an elevated viaduct and 4 elevated stations for about 400 crore rupees. Now, this should be positive for the stock, but maybe some of it is in the price because look at what HG Infra Engineering did in Friday. It rose about 7.7% with very high traded volumes, 18 times the weekly average. It is now trading above the short-term and long-term moving averages. MK Quant suggests that the momentum indicators, which is the RSI and MACD, indicate further bullishness on HG Infra. So it's already gone up quite a bit. MK believes it can go up more, and there is a order win announcement to support that. So maybe HG Infra Engineering continues its up move that it had indicated in the previous session. Now, viewers, I have not included Jindal Poly. I got the news late from the newspaper, but apparently there is a blast in its Nashik plant, and that might spoil the sentiment on the stock today. So watch out for that. Prayers go out to people who were injured or who passed away at the blast, of course. So prayers to them. Not the best start to the year for them and their families. So um, sad news from that perspective. But the stock as well could actually be under pressure today. So mind you, watch out for that. Lastly, viewers, I want to end with what Dr. C.K. Narayan, who writes the weekly column for us, and as big and as strong a technical market voice as it comes, and his 2023 prediction. The reason why I'm doing this, because if you look at what he did in 2022, his prediction was spot on. He spoke about the November highs being the highs for the year, and that's how it happened on December 1st. He spoke about June lows. He spoke about specific levels, and all of those turned out to be true for 2022. Now, that doesn't mean 2023 will turn out to be as good as well, but I'm still bringing out what he believes technically could be the course for the year. So he believes 17,000 to be the lowest Nifty level for 2023, which will likely be recorded in March and April. He believes that the first quarter will be sluggish, will drift lower, and 17,000 levels would be the low levels that you got to keep in mind. Believes the second half of 2022 promises to be a bullish period, and therefore, even after the lows recorded, the markets may remain sluggish until April or May. Now, from those 17,000 levels, the Nifty crossing above 17,600 would actually mark the turning point. The Nifty target by December would be 19,500 or 20,200, according to him. So, post May or June is when we actually start a bullish run, according to Dr. C.K. Narayan. Of course, he says that if the Nifty corrects below 17,000 levels, then all bets are off. Um, Keep this big picture in mind. He's been doing this now for the last 30 years and gets it near spot on the broad macro levels for the Nifty almost every year. So keep this in mind. I'm not saying this is necessarily turn out to be true. I'm not saying you should follow this necessarily. It's an expert market voice, has gotten right more often than not. Might pay to just keep this at the back of your mind. For the Bank Nifty as well, lows of 38,500 to 39,300. Breakdown below 38,500 can be worrisome. Upside levels of 47,500 to 51,000 in 2023. Again, the time zones are similar. The first quarter, you see the lows and then the highs towards the end of the year. So at the start of the year, I thought this was an important uh, broad thought to be brought to you from an expert market technician. Net, that's the long term. For the short term, expect sideways movement on the indices. Expect CD companies to be uh, maybe the outliers today on the positive side. A couple of other auto names could do well, maybe Eicher Motors, so watch out for that. MCX could have a bit of a worrying day. Maruti could have a bit of a tough day. So those are the things to keep in mind. And we start off the year on talking point with a market voice as good as they come. Manish Dangi marries the macro and micro with a plumb of macro mosaic investing and research. He joins in to talk about the macro view in the global context, so do watch out for that. And this week has some terrific voices on talking point. Manish Dangi, Samit Vartak, Howard Marks. Yep, it's an action-packed week that we have for you at the start of the year. Thanks so much for tuning in today. Have a safe day ahead. And have, once again, from me and the team that puts Talking Point and all the shows together, have a fabulous 2023.